Hello, welcome back. This is Seewing Yee, and today I'm going to go over the mid-year Texas housing market update. This is the Big Four. The Big Four are Austin, San Antonio, Dallas, and Houston markets. Like and subscribe to my YouTube channel. And finally, register your email into my website below so you can receive weekly free real estate investing newsletter. Without further ado, let me share my screen and let's go over first the Austin housing update. I know Austin over the past year or so, they are getting a lot of negative headlines and people pick on Austin quite a bit about this up and down, boom town, bust town scenario. So let's dive deeper to see what's going on the year 2023, as well as we can go over the new listings for each market, each of the four markets. And by the way, I did not look at this data in advance by Redfin. So I'm going to go over the new listings, pending sales, medium sales price year over year, and weeks of supply, which is the most important metric, and a couple other things. All right. So I'm going to spend maybe 7 minutes on each market if I could keep track of this time, which is very difficult because I always say more than I need to. All right. New listings in Austin. The blue line is current year, of course. The black line is last year, 2022, and the orange line is 2021. So new listings is right now sitting for this particular week is sitting at 896 new listings, which is 16.4% less new listings than 2022. And then let me go over the pending sales. Pending sales, let's see, the blue line, which is right here, the week ending August the 7th, the pending sales is at 741 pending sales, and which is 26.8% less pending sales than similar time last year, July 2022. All right. And then the next metric is one of the two most important metrics, which is the median sales price and the months of supply. These two metrics is the most important for people out there who are listening. Let's go over the median sales price. And here it is. Before we even go over do that, the peak of the Austin prices, like I said, during the pandemic, Austin home prices has skyrocketed to triple digit, to quadruple digit for that matter. At a peak of, and then a lot of people predict there's going to be a housing crash in Austin. Yes, is it going to be a housing crash? The data we'll share with you momentarily. I'm going to tell you, and I don't think so. I still call it a mild correction. So last year, the peak price was in May of 2022, right before the skyrocketing of the interest rates has transpired. So which is a medium sales price is at $574K, and which is up 24% year over year in 2022. Then when the rates skyrocketed over the second half of last year, the median sales price has dropped from 574 all the way down to 457. We're talking about medium sales price. So a lot of people are just picking on Austin. It's a boom and bust town, whatever. People, all the doom and gloom people, all the sky is falling, especially those crash porn websites. They are having a field day talk about the crashing of the Austin metro market. I don't know. We'll see. Yes, the medium sales price has gone down, maybe a double digit, a little bit, right? However, if you look at the beginning of 2023 this year, so the starting point was right here in January 2023. The medium sales price was, like I said, 453. And then there was a slight decrease up until February of this year to 439, then slowly picked up all the way down, all the way up to here around June 25th this year. The market price, the medium sales price has picked up at 479K, then from 479K from June 25th until August the 6th, a few weeks later, which is to 467. Yes, there's a way to catch up. At least this year over year prices are not dropping. Yes, there's a lot of excess inventory according to Redfin and few other media sources, there are more inventory available in Austin market than in most other metros in the country. We'll see whether the next metro we can discuss is the month of supply. So before we do that, we'll know what's going to happen for the remaining of 2023 because of the, at least nationwide, we have such a low supply of inventory. I know the mortgage rate is right now, according to Mortgage News Daily, is a whopping almost 7.2% for people with good credit, that is, which is pretty amazing, highest in the past 20 years, I believe. But the demand is still up there. Many parts of the country, the demand is still exceeding supply. We may be seeing for the rest of this year how the trend in terms of medium sales price is going to occur in Austin. I will report, keep you posted on that. However, the most important final metrics I'm going to share with you with regards to Austin is the month of supply. Here it is. This is the most important metric, the months of supply. By the way, 5 to 6 months is a healthy market whereby the demand equals supply. It's a balanced market, 5 to 6 months of supply of inventory. So let's go over this situation according to Redfin. The weeks of supply is 18.8 months divided by 4 weeks per month. 4 times 4 is 16. 4 into 28 around 6. So 4.6 months supply of inventory. What does that mean? So we are not in a seller's market. We are almost at a healthy, balanced market in terms of demand versus supply. 4.6 months, a little bit below my threshold of 5 to 6 months, or not just my general consensus of a balanced market is 5 to 6 months. We are at a 4.6 month supply of inventory here in Austin Metro. We are not quite in a buyer's market. We're still at a slight seller's market. That's what's happening. And however, you look at the beginning of around at the end of January this year, look at the supply of inventory. We're talking like almost more than 5 months, almost 6 months supply inventory, but the inventory has decreased. So there are some good activities in Austin. Anyway, that's all I have to go over with Austin. So my takeaway with Austin Metro, no, there's no housing crash because there's a lot of inventory available, which is good. It's an opportunity for a lot of first-time home buyers and for investors to pick up some decent bargains at a so-called reduced price from last year, at least, maybe 5-10% reduction. But then, of course, it depends what zip code, what neighborhood we're seeing the biggest drop in prices or whatever. Again, Austin, in my mind, for the long term, is still a very robust economy. It's a Silicon Valley 2.0, if you will. So a lot of high-tech jobs, high-paying jobs, people still moving here. Austin has have gone through a correction worse than many other metros in the U.S. But to say that Austin market has crashed, that would be an overstatement. That would be an exaggeration in my mind. So share with me, what are your thoughts in terms of about the Austin metro market? If you live in Texas, if you live in Austin, please comment below, share with me what's going on in your neighborhood. Are you seeing a crash correction, or are you seeing bidding wars and multiple offers that are prevalent currently throughout many parts of the country? Let's go over to the second market I'm going to discuss, San Antonio, Texas, which is San Antonio is 1 hour below Austin, approximately, down the Highway 35. By the way, what I do, I'm a real estate investor. My company, the Yee Real Estate Network, we are a real estate investment club. We have several thousand mom and pop investors on our community, and I helped our community of investors to buy out-of-state cash flow properties for many years in many markets. We pivot to different markets based on what's happening. So we are still having investors coming into the Texas market to buy low, affordable, single-family homes and up to fourplex for cash flow purposes at 25% down payment, even with the elevated mortgage rate. But however, we have some builder incentives where our investors get a reduced rate when they buy down the points, so they can still cash flow at 25% down payment in many sub-markets of the Big Four of this Texas Big Four, just so you know. So if you want to learn more about it, please, again, subscribe to my website below so you can become a free member of our real estate investment community. Without further ado, let's go over San Antonio new listings for this year is at 886 listings, down 20% from last year, 2022. So the new listings are down. And then let's go over pending sales, also down by 15.5% year over year, August the 6th of 2023 from last year, July 10th, 2020. Anyway, yeah, it's less. It's trending downward from year over year, the last 3 years pending sales. And let's go over medium sales price. All right, medium sales price. Here we go. San Antonio, it appeared to be a pretty much stabilized market compared to Austin, up the freeway 1 hour north. So medium sales price currently at $320K. As you can see, there's a big disparity between the medium sales price of San Antonio versus Austin. So Austin medium sales price is more than $100,000 higher than Austin. So therefore, a lot of people are migrating from the Austin metro into San Antonio 1 hour away only. So in the future, Austin and San Antonio will connect. It will be called a metroplex. Austin, San Antonio will be one metroplex, just like Dallas, just like Houston. That is what's going on in the next 5 to 10 years. So just so you know, San Antonio is a very robust market. It's very affordable compared to San Antonio. So a lot of people are moving to this area. We have investors coming here also to buy cash flow homes with the builder reduced mortgage rate incentive. So that's what's happening. But you have to understand, we are buying in the emerging market, suburban path of growth. Investors are buying at least 1 hour away from the main metro of these 4 cities. Just keep that in mind. The median sales price last year, or have not been that volatile. The peak price in San Antonio in July of 2022 was $338, even with the skyrocketing interest rate from 3% to 7% over the second half of 2022. The median sales price have not gone down that much. It went down from the peak of $337 to only $319 toward the end of last year. Then we start off this past year, January 2023, with a median price of $320. It took a slight dip in February, but since February, the median sales price had gone up steadily from February all the way until August right now, which is $320K. Still have a little bit of catch up to do to reach last year's peak, but the trend is doing well. Again, we expect for the rest of this year, for this blue line, for this year's prices to be flat or maybe slightly higher. It's not going to go down like last year, because people are settling in to the new normal, which is the mortgage rate between mid-6s to low 7%, as we're seeing at this moment. So we expect the San Antonio market to be very, very healthy, to very specialized. And then active listings are pretty level, very surprising, similar to 2022. We are at 10,174 active listings here in the San Antonio market. So it's very stabilized. Compared to Austin, is a healthy market. So active listings are very consistent year over year this year. And finally, here are the month of supply, which is very critical. We are at 15.9 weeks of supply divided by 4 weeks per month. So it's a little bit less than 4 months of supply of inventory. So it's still a slight seller's market. It's not yet at a buyer's market. However, the week of supply have took a big dip this past few weeks. Don't know why, but that's what we're seeing in the San Antonio market. So the big takeaway for the San Antonio market is very, very stable. Houses are selling nicely. Nothing outrageous. It's a very good balanced market. So it's a good opportunity for primary home buyers and investors to enter this market and have a good expectation of a very consistent growth in this marketplace due to population growth, job growth, very healthy economy here in San Antonio. So that's San Antonio for you. And then let's move on to Let's move on to the Houston market. Houston, let's go over the new listings for Houston, which is a huge metropolis. Houston, I think the fifth or the sixth largest metro in the country. We're talking about 7 million people live in Houston metro. Wow, huge city. Very congested, very fast growing, just like all the big four cities in Texas. New listings in Houston are down 13% from last year at 2,460 new listings, down from last year at 13%. Let's go over the pending sales. Pending sales has steadily have gone down since May. So May, June, July, August, for the past 4 months, pending sales has gone down. This means people are not listing their homes for sale, not as much as before. So almost 10% less pending sales compared to last year. Let's monitor these negative trends. And then median sales price in Houston. Wow. It peaked at May of last year at 353 medium sales price. And then 353 went down to 329. So not much of a dip during the second half of last year, even though the skyrocketing of interest rates has occurred that drastically reduced demand, but the supply is still pretty limited. So as we begin the 2023, the medium sales price at 329, then took a major dip in toward the end of January of this year to from 329 to 311. Then from February, it the medium sales price steadily has gone up month over month to the peak, which is right here in June 25th, last 2 months ago at 346, and then took a slight dip. Now, August the 6th, 2023, it has reached 342. So it's pretty much caught up. Houston pretty much caught up with the last year's peak. So I do not see any drastic, there's really no crash, of course, in Houston. No, even a very slight correction. That's no big deal in my mind. So moving forward, we expect that the rest of the year, due to the seasonality of the housing market, just like every year, as we begin toward the second half of each year, we may see a flat housing prices and maybe a slight dip due to lack of housing activity as we head towards the holidays and the fall timeframe. That's the medium sales price. And let's go over active listings, which is another very important trend. The active listings start off the year with at 24,000 active listings. It went dip down quite dramatically, not dramatically, just a little bit in April to 22,000. So the active listings is more than last year. Right now, the active listings are 2.6% less active listings this year, August 2023, from last year. Interesting trend line. Don't know what to predict for the second half of this year, but nationwide, we have a very historic, according to Redfin, we have a nationwide only, there's a 2.8 month supply of inventory nationwide. So we have a pretty much a historic low supply of inventory due to the lock-in effect, because many homeowners, 65% of the current homeowners with mortgages, they're locked in at a mortgage rate at 4% or below. They are not going to move up to buy a move-up home at 7% mortgage rate, essentially doubling their payment. So there's a lock-in effect. Most homeowners are locked in at historically low mortgage rate, so they're not selling. Therefore, it's causing a very acute, historic low supply of inventory, and the demand is still pretty good in spite of the elevated mortgage rate. Just want to put it out there. I know you might have heard it before. So active listings are pretty stable this year. Let's go over the monthly supply here in a huge Houston market. The monthly supply is 13.2 weeks of supply. Divide that into 4 weeks per month. 4 divided into 13. We're talking equal 3. Then there are 12. So there are around 3.3 months of supply of inventory, according to Redfin. 3.3. So it's still a strong seller's market. That means there are more demand out there than there are available supply of inventory in the Houston market. So that will put upward pressure on increasing home sales prices. That's what we're seeing, and a very, very low supply, pretty much equal, almost equal to last year's supply of inventory. But of course, in 2021, which the real historic low supply of inventory back in 2021, we only had like 2.4 months supply of inventory here in the Houston market in 2021. It's more so than right now, but it could be trending down. We don't know, especially if the mortgage rates stay elevated at 7%. We can have a even more severe of a lock-in effect of the lack of supply of inventory. And the new builds that we've been hearing, the new construction is comprised of 30% of the new home sales. But the builders, based on my research, if you look at my YouTube channel, I talk about the how builders how new construction are trying to ramp up to offset the lack of supply from the resale side. Let's keep that in mind. That's pretty much the Houston market. My takeaway is Houston market, again, limited housing supply, like I just said, and home prices should be either flat or increasing for the rest of this year, medium sales prices, that is, giving the low supply of inventory, and active listings are still fairly stable. It's pretty decent market, nothing too much to worry about. And finally, my takeaway is Houston is a very good market. We'll continue to see, just like all the major cities in Texas, it has a population growth, job growth, good economy, low unemployment, and is a Sunbelt destination. Texas in general, it is a very good market to buy primary home and investment homes. We have, again, 1 hour away from the Houston metro inner core. We still have a little bit of cash flow homes available. We are still helping our investors to buy cash flow properties, slight cash flow properties with 25% down payment. And finally, last but not least, let's talk about the huge Dallas metroplex. What's going on with that market year to date, mid-year 2023? New listings are at 1,679 new listings this past month, which is 13.6% less new listings than last year. That's what's happening. And then pending sales, because of a lack of new listings, and pending sales are at 16.5% less. Wait a minute. No, I'm sorry. We just went over that, huh? Let's go over pending sales. Sorry. Pending sales are 13% less. Pending sales has occurred from this year, from last year. And there are more pending sales in 2021, less in 2022, and even less pending sales year over year in 2023. So there's a negative trend. So let's go over the all-important medium sales price. Wow, interesting. Dallas, the peak of the market in Dallas last year, around June of 2022, the medium sales price was $386. And now we are, this year, on the blue line, 2023, the medium sales price is $382. You could make the argument is pretty much the medium sales prices increase year over year this year has pretty much caught up with the highest medium sales price of last year, of last June and July of 2022. So things are moving up. However, if you look at the second half of last year, as a result of the higher mortgage rate, the medium sales price have reduced from 386 at the peak in June 2022, 386 all the way down to 350. And at the end of last year, then beginning of the year, 350, a slight dip. Why this slight dip in February on every market? Then went up steadily from February all the way until right now. Steadily, medium sales price has increased over the past 6 months to a point where it's all caught up. We can see there's a double-digit medium price increases, 349 at the beginning of 2023, 349 to 381. So we're talking pretty much a doubled 10% or so increases in medium sales prices. So again, for the rest of this year, we expect maybe a flattening because of the seasonality of the year. We expect less housing activity for the rest of this year. All the robust spring activity should have occurred in the spring of every year, but the spring for this past year has anything but normal. Let's put it that way. Medium sales price looking good as the increases of this year's home prices have caught up. with the peak from last year. So again, no housing crash in metro in Dallas, and no very slight correction occur in the second half of last year. That's a very good sign. That's medium sales price. And the next trend, very important, of course, is active listing. Let's take a look. Active listing is pretty stabilized from January, there's a slight dip in February, and then pretty stabilized year to date in terms of active listings. There are, let's go with Dallas, Texas Metro. Here we go. Active listings year to date. Active listings at 14,378, which is 11.6% less active listings this year from last year. As you can see, last year there were more active listings in 2022. So the active listings is pretty, you could make the argument, is pretty stable. That's a good sign. So there's still a fair amount of inventory. We'll see. Let's talk about inventory, which is very important. So months of supply, and this is the final metric of my video, final episode. Anyway, weeks of supply right now is August the 6th is 11.6 weeks of supply divided by 4 weeks per month. 4 divided into 11.6. Yeah, a little bit. 4 times 3 is 12 months. So the months of supply is a little bit less than 3 months. So I would conclude that Dallas market, Dallas Metroplex, have a strong seller's market. I would conclude that the supply inventory at 2.8%, months of supply inventory is very low, giving the pent-up demand. So I have to believe there is some element of bidding wars and multiple offers, slightly above asking, and 3 to 5 offers per house. I have to believe that. So if you are living, for those of you watching my video, if you live in Dallas or somewhere close by, let me know what's going on in your market. Is this data pretty much indicative of where you live? Although real estate is local by neighborhood, by zip code, whatever. So I would love to hear some of your comments out there. So week of supply is very low. You know what? So my takeaway is Dallas is very stabilized. Obviously, we have not gone through a housing crash last year, in spite of some crash bros porn videos out there. They always talk about negative headlines and doom and gloom and the world is coming to an end scenarios. It's not happening. Again, Dallas has gone through a very slight correction. It's a very robust market. It's a very low supply of inventory, less than 3 months. So that's what's happening. So overall, the Texas market have done very well. If you short term, you have to overcome this short-term volatility about what's going on, economy, inflation, job report and recession, all these kind of external factors that it seems to be a lot of negative headlines out there, but really it's not really all that bad in overall the big 4 of Texas market. So again, my conclusion is based on the low national supply of inventory, based on the lock-in effect, based on the strong job growth, the talk about recession is pretty mild if we have one. So again, lack of supply, pent-up demand, even with the mortgage rate, we're still seeing a lot of housing activities, people try to buy, and not enough homes out there to buy. My takeaway is Texas market is doing fine. Moving forward, if the mortgage rate decrease in the next 6 to 12 months, then things will get even better. So things are looking good. The Texas market are still very robust, still very desirable. It's part of the Sun Belt. We have job migration and population and job growth, very strong economy, and all big 4 cities in Texas. So if you receive, as I conclude this video, if you receive any value whatsoever, please like and subscribe to my YouTube channel. And finally, and comment below, share with me whether if you live in Texas, let me know. Comment below. Let me know what's going on in your market. Is it in alignment with the data I just shared with you? If not, tell me what's going on. Or you get some bidding wars or whatever in your particular local market, local zip code, whatever. If you're watching this video from outside Texas, share with me as well what's going on with your local market, because every market is very different. Real estate is very hyper local. There's no such thing as a national real estate market if you think about it. Subscribe to my website, the Yee Real Estate Network below, so you become a free member of our real estate investment community. And if you put your email down below, you will receive free weekly great real estate investing information. It'll show you where to buy, how to buy, the cash flow markets, the best markets to buy where you can cash flow, where you can get some really good builder incentives, so you can become a very good risk investor. That's all I have to say. This is Seewing Yee. Thank you so much for listening, and I'll see you on the next video very shortly. Have a nice day. Bye-bye.